I doubt it. The world economy is much more complex than it was back in 1985, and of course China was not an important player at that time. We were devaluing the dollar against the yen and the Deutschmark.
Right.
And that Plaza agreement really didn't last very long because Japan did not want to allow the yen to appreciate that much, so they ended up sterilizing and eventually 2 years later the Louvre agreement came around where they wanted to strengthen the dollar a little bit.
Yeah.
And they just ran into one problem after another. What we need is we need more flexible exchange rates, not more pegged exchange rates, and we need to get China
more flexible exchange rates. So how would that solve the, if you think, do you agree with the president that the U.S. dollar strength is even a problem right now? Because when you look at that chart back to 1980, it looks like we're in a sideways range, not in some big breakout.
Yeah, well, I think the Chinese devaluation was a slight devaluation a couple days ago. It upset the markets initially, but they came back, and it would not be in China's interest to allow the yuan or renminbi to depreciate to any large extent, because that means the dollar would be appreciating, and they have a lot of dollar-denominated debt.
Absolutely.
Also, if you get into a situation where you're trying to get top-down coordination with respect to exchange rates among the major players, you're probably going to end up backing into capital controls, which would be very disastrous for the global economy.
Yeah, so Kamal, let me bring you in on that. First of all, how strong is the U.S. dollar? Is its strength a quote-unquote problem as you can see it?
Hello, Kelly, first of all. It is a problem in that it has crossed the radar screen of the president, and this, I would say, is an unprecedented move by any U.S. president to talk about the dollar in such explicit terms. In terms of what can be done about it, as you've said about the Plaza Accord, what was very interesting there is that both Germany and Italy and France were all willing participants in the move to weaken the dollar. They were concerned about their currencies being weak. Now, if you turn around to the ECB or the Bank of Japan or even the SMB in Switzerland, they will all tell you that currency weakness is an essential component of their monetary policy toolbox at the moment. So it's going to be very difficult for Trump to engage with its G7 counterparts to willingly coordinate and weaken the dollar.
Yeah.
Is it strong? Yes. What is our metric for it being strong? It's overvalued according to a range of our metrics. But also, if you look at the dual deficit, the current account deficit plus the public sector deficit, we are seeing a glaring divergence, much in the same way that we saw during the Plaza Accord.
Wow. Well, Kamal, last thing on that, you said that for those other countries like Europe and Japan right now, currency weakness is an essential tool. Is that fair?
Well, in the absence of any significant fiscal stimulus push, and we've heard today from Chancellor Merkel that there isn't going to be a significant fiscal stimulus push, all the emphasis is on monetary policy. We are effectively going in ever-decreasing circles here. It seems that we're right at the beginning of 2014 again, with the ECB about to cut rates, potentially embark on a further QE cycle. And the only way that it's generating inflation is by keeping the currency weak and hoping that oil prices will rise as well. So in a way, this is the only option that they've got left. And if you listen to President Draghi, even President Trichet before that at the ECB, their emphasis has always been on structural measures by governments plus coordinated fiscal stimulus to alleviate the pressure that monetary policy is indeed feeling at the moment.